Good afternoon, student. This is the fifth part of the chapter Money and Credit, class 10, subject Social Science. Student, in this section, we will begin from page number 48 and our heading is Formal Sector Credit in India. I hope everybody is clear that there are various sources of credit what exist in India from where borrower can borrow the money and lender can lend the money. These sources of credits are, for example, in the village area, money lender, rich landlord, in the nearby town of the village, agricultural traders, some friends and family members, members along with them, some relatives also, some banking institutions, some cooperatives, and in the urban area, mostly you will find banking institutions of various uh, nature as well as some non-banking financial institution. Student, all these credit institution, all these lending institution can be divided basically into two categories: formal and informal sources of credit. What are formal sources of credit? A simple definition of formal sources of credit is that those institutions which can be monitored by any particular institution. For example, in India it is Reserve Bank of India, then it and its activities are done as per the guidance from any such institution which is meant to monitor them is called formal sector of credit in India. On the other side, informal credit sources of credit, simply its name itself suggests that it is not being monitored by any resources. That is why it is not being monitored by any institution with any authority. That is why it is called informal sources of credit. I am repeating again, formal sources of credit simply means which work under certain guidelines set by the premier institution dealing and setting the standard norms for them. And informal institutions, quite opposite to the formal, that are not being governed and uh, directed by any supervising institution. That is formal and informal. For example, banking institution, non-banking institution, cooperatives, these are the best example of formal sector of India. On the other side, informal sectors in which money lenders, agricultural traders, rich landlords, family, friends, relative, these can be included over there. Though where you cannot monitor anything, where any institution, supervising institution cannot monitor the entire process of lending and borrowing. Let us begin, student, with the graph on page number 48 where the pie diagram is showing you how in the village area what section of loaning is taking place and uh, what section of loaning is being contributed from which lending institution. So it is shown over here. And what is the criteria? Sources of credit as per rupees 1000 of rural household in India in 2012. This data is showing you that money lender contribute 33%, means it is informal sources of credit. Another one is relatives and friend, they contribute 8%, landlord 1%, and other institutional agencies that are 5%, commercial bank 25%, and cooperative society and other banks, that is 25%. So you can say 50% or 55% is contribution now in the total lending belongs to formal sector. 25% look cooperative society in banks plus commercial banks, another 25%, 1% government, that is 51%, other institutional agency, that is 56%. Remaining 44% is contributed by informal sources of credit. You can say that comparatively it is 50-50%, but what is important that through which we can draw conclusion in the later part of this chapter, later part of this particular section. But let us begin our basic area, that how formal sector of credit is governed in India by a supervising institution as a head of the banking institution, that is Reserve Bank of India. Student, we are all aware that all banking institution, be it commercial bank, be it cooperative bank, be it Grameen Bank, or any other possible institution, even non-banking financial institution, what is not mentioned in your textbook, all are governed by the Reserve Bank of India. Reserve Bank of India ensure that the rate of interest remain fair and reasonable. Rate of interest should not be going beyond the range of the people, so that they can take the loan and can get the kind of benefit from the loaning or credit can be possible for them. RBI also ensured that the bank follow the cash balance to maintain the demand deposit terms condition. RBI also set the condition that is called minimum cash balance or cash reserve ratio. This word CRR is not mentioned, but let me read it for you. Cash reserve ratio, which means bank has to keep certain portion as a cash with them, so that if the depositor comes and asks for their money, bank can easily provide them their money. Rest of the money can be given as the terms and condition, that is for the lending, of lending and making some profit for the banks. Student, bank also ensure that these banking institutions should not keep giving money or lending the money to the rich household or rich industrialist class. They should also ensure that the money should be given to the poor farmers also. Money should be given to the educated unemployed to start any enterprises. Money should be given for the setup of a small scale industry or cottage industry, so that these group of people also can get the benefit of the formal sector loan. When we actually go to into the detail, we comes to know that mostly the banking institution or formal sector loans give loan to the rich household in the urban area or the upper section of the society. In the village area also, people like Arun used to take the loan from the bank, but you could see that how the people like Shamal or Rama were remain exploited because they were taking the loan from informal sources of credit. Now let us discuss how informal sources of credit are doing in our country. Number one, informal sources of credit are not governed by any supervising institution, so they are free to charge any rate of interest. You have seen in this chapter that Shamal was paying 60% per annum, which is very high rate of interest. And later, when he started taking loan from agricultural trader to the nearby town, even then it was 36%, which again was quite high if you compare with the loan of the Arun, which was only 8.5%. Second, that these institutions which are not being governed by the any institution, supervising institution, I mean to say that the informal sources of loan are making also the exploitation by setting any terms condition for the repayment of the loan. They also use unfair means sometime which are illegal to use to get back their money, like they threaten to the borrower if the borrower somehow unable to make the payment of the installment of their loan. Also, these informal sources of credit do various things, like their high cost of interest, high rate of interest don't let the borrower to grow actually, because their larger amount after borrowing used to is go to repay the loan, and there is less saving for them. That is why they never grow up. You have seen the case of Rama, where she was in a situation of debt trap. Or similarly in the urban area, if the people take loan from these resources, there is likely to have this crisis, because if the rate of interest is high, then the borrower after taking loan will have to pay huge amount to huge amount, and is as a result they will have less as their saving, and less saving means they will not get chances to grow, and they will again and again require to borrow the money to set up their industry. It is also possible that the person may end up making loss or find itself into the situation which is called debt trap. I hope I made the point clear, student. That is why in the last part it is written that in our country it is advisable that there has to be cheap and affordable rate for every section of society, so that students, the section we have discussed already, like educated unemployed people who want to set up any enterprises, small scale industry, those who want to set up a small scale industry or cottage industry, or farmer, those who want to do any agricultural activity, can borrow money from here and can easily repay the money with the easy terms and condition, and can make better profit. Something like Arun had the luxury of taking loan from bank and not selling his crop to anyone till he wanted to sell by getting a higher prices. You have seen it yourself that if the cheap, and so what we can say, nutshell message is that cheap and affordable rate is required for the development of the country. Student, here onwards we are moving to page number 49, on in which you will find that there is another heading, formal and informal credit, who gets what. We will be finding here all the conclusion through this graph too. Here student, four pie diagrams are shown, and we have to see that how urban household take the loan between formal and informal choices available to them. Student, there are four categories representing through four pie diagram. I suggest you that you open your own textbook or the soft copy being provided from my side and go through this, so that you will be easily able to understand that how the things are actually contradictory. In the previous heading we said that loan is beneficial only when the cheap and affordable loan is provided to the borrower to every section for the development of the country as well as for the development of that individual. But look at over here, you will find that there are two sections in each pie diagram. The blue color is showing the informal sector and purple color is showing the formal sector. Student, first take the first category, that is poor household. In the urban household, among the poor section, you will find 85% of their total borrowing is done from the informal sector, and only 15% of the loan is taken from the formal sector, which itself is saying everything what I've been explaining you from last 4-5 minutes, that the section which actually required the help from the formal sector is not getting the help. They are still compelled to take their loan where they are most likely to get exploited, that is informal sector of loans. They are not going to this section. Maybe there are few reasons. Number one, they don't have collateral, as we have discussed that all these formal sector institutions which actually lend the money only by taking the collateral, and these poor people might not have some assets to give as a collateral or as a guarantee or security. Second reason, that these people do not understand the kind of documentation, because they are uneducated, so they are always afraid of the documentation. Instead of going to these informal sector, they prefer to go to those who are likely to charge high rate of interest as well as a kind of terms and condition that they will be given less time to repay their loan. Now move to another category, student, that is household with few assets. You can say it is middle class. It is somewhere 53% from the informal and 47% from the formal. You can say it is 50-50%, because this section is expected to understand that the benefit of taking the loan is from the formal sector. So if they fulfill the conditions set by the formal sector, they never prefer to go to the informal sector. They only go to informal sector when they are unable to get loan with the condition set by the formal sector. On the other side, poor are not available the kind of benefit they will get if they will borrow money from the formal sector. Moving to well-off section of the society, you will find that there is a larger share of the formal sector, that is 72%. It means this section is quite aware that they have all the fulfillments, they have all the conditions that require to fulfill uh, before borrowing the money, like documentation. As I said in the terms of credit, that it requires certain documentation like salary slip, like IT form 16, as well as certain other things like the collateral. So these section are likely to fulfill that, and that is why most of them used to take the loan from the formal sector. And moving to the upper section of society, student, 90% of them borrow money. The rich landlord, the rich industrialists, those who want to set up big industries actually borrow money from bank, and only 10% in rare cases used to go and borrow money from informal sources. So it itself gives an idea that larger section of the people which borrow the money from formal sector is the well-off section of the society, but the formal sector is not providing its benefit to the needy section of society, that is poor or the middle class, to set up their business, to because they are not being made aware that if they will borrow money from the formal sector, they might be making the more income and they will get some easy pay terms condition to repay their loan. Probably they are not being made aware of. That is why, student, for the development of the country, we can conclude here that it is required that the more and more credit arrangement should be done from the formal sector. Let us read what is written on the page 50 of your textbook. It is written in bold colors that it is necessary. I am reading again and concluding my portion. Thus, it is necessary that banks and cooperative increase their lending, particularly in the rural areas, because most of the people in rural area used to borrow money from money lender or other informal sources, so that the dependence on informal sources of credit reduces. This is required for the growth of the country. This is required to stop the exploitation of the poor people. There is another point, students. Secondly, while formal sector loans need to expand, it is also necessary that everyone receive these loans. Formal sector should increase their base. It should not remain limited to only urban area. It should be having its presence in the it should require to have its presence in the rural area also. But it is not only that their presence is there, but no one or larger number of people are not turning up to take the loan. They should make it accessible. They should convince the poor section of society that loan for them through the formal sources will be beneficial for their individual growth as well as for the growth of the country. Now, to sum up this, student, there is a let's work these out section. I hope that you will be able to do it yourself, but let us discuss as a guidance for you, that if you are wanting to answer, you can find the appropriate answer. Your first question is, student, what are the difference between formal and informal sources of credit? In this video content, I told you that formal sources of credit follow the rules and regulations set by the institution which supervise their lending activities, which keep the records, and which force them to give the loan at the cheapest possible rate of interest with the easy terms and condition. And these all the credit arrangement should be in a written format so that any time it can be observed and evaluated. On the other side, informal sources of credit, as it is done casually without any written record, whatever terms of condition informal sources want to put on the borrower can be put and can be exploited. That is the basic difference. Now, I would suggest you that you go through all the content what between page 48 and 49. All these points are written over there. Find it out yourself and write the answer along with what content is provided to you. Now, why should credit at reasonable rates be available for all? As we discussed, that if credit will be available at reasonable rate, people will have to pay less to repay their loan. If they will be paying less, the larger section of their earning will be used to save the money, and then it is possible that in the near future they might not require to borrow money from the bank again. They will be capable themselves, like Salim example of Salim is very good example, that after 4 or 5 years of the working and borrowing money, he was so prosperous that he was not supposed to borrow further to the bank to carry on his business product or other production activities. Should there be a supervisor such as the Reserve Bank of India that look into the loan activity of informal lender? Yes, student, it is very much required. Now, informal sector should also be under the control of some super institution which is meant to supervise their terms and conditions, which is the terms and conditions set by them on the borrower, so that the exploitation of these poor people can be stopped, and these informal lender can be also under the control of uh, the supervising institution, or in uh, other terms you can say that they will also become the formal sector of loans. Why would its task be quite difficult, student? We have discussed that friends, family, members, relatives, money lenders, it is very difficult, as the borrower himself do not go and get the or insist to the informal lender that there has to be something in the written format, that what are the terms and conditions. Number one, they are not educated themselves. Number two, that sometime they are not aware that how they can be exploited. They are not aware about the means of exploitation done to them. Fourth is, why do you think that the share of formal sector credit is higher for the richer household compared to the poorer household? We have discussed little earlier, student, that rich section do understand that if the rate of interest will be reasonable, they will end up making more profit, or in other terms, they will be making the proper growth for which they are borrowing the money. On the other side, the poor household is, because of being not so literate, because of the factor that they do not have the proper collateral or other terms of credit that they can fulfill, that is why they do not go to the formal sector and ask for the loan. So these are the casual answer provided from my side. I am not helping you to get a proper answer. You go through the content provided in the worksheet. If these questions, some of these questions are common, leave it. Remaining question, you write it yourself. If any problem exists, do discuss with your teacher in the classroom. Thank you, student.